what we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States. In Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London can't continue overwhelming the physical market. Hi, everyone. It's Mike and Alan once again with the Gold Silver Show. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great. Before we get started, I just wanted to remind everybody, especially anybody new to the silver market that may have just purchased, and then we witnessed this breathtaking drop. Silver is a roller coaster, and you need to have the stomach for it. It is a long-term investment, and to me, these are the times that I use to add to my position. Most people are chasing price, and it's best to try to be a contrarian. And it takes a lot of guts to do it. I think it's not an easy thing to go against your emotions, but part of successful investing is controlling your emotions and making sure that they don't control you. So, what have you got for us?
Yeah, well, I basically wanted to zoom out a little bit and sort of remind our viewers that the bull market is not even close to over. So I thought we could look a little bit at gold, a little bit at silver, and of course the ratio between the two. So the first thing I have here is IMF data. Gold now exceeds 1/5 of world reserves. So central banks know what's coming. You can print dollars, but you can't print gold. They're stocking up on it. This is not the end. This is a continuation of a really long-term trend.
Yeah, well, yeah, but you can see the acceleration of the trend really started in late 23. It is a long-term trend. In fact, that you can print dollars, but you can't print gold. That was in my first book back in 2007, 2008. The point of this video, like you said, is it's not too late. It was better to be buying gold back in 2007, 2008, 2009. The longer that we keep on kicking the can down the road, the bigger the potential highs become, because it's all an inverse of what is the dollar going to do? It's like inverse, but it's also a magnifier.
Yes, exactly.
Yeah.
And I actually have a chart to show that in just a little bit.
Oh, okay.
So so our next thing here, top assets by market cap. Gold officially becomes the first asset in history to hit $30 trillion in market cap. That's kind of crazy. But yeah, this is actually just what you just said, Mike, which is that there's so many dollars and you can print them. And what happens when you print 30 trillion of them is that the market cap of gold will be 30 trillion. So it's kind of wild.
Yeah, that was one of the key premises of the first book, is that gold always does an accounting eventually of the expansion of a fiat currency supply. And it's done this throughout history, and it's a reliable thing that you can just sort of count on. But it's all driven, it runs in waves and cycles, and it's driven by public emotion. And right now, the public isn't trusting the dollar enough, or actually, I need to rephrase that. They've trusted it too much in the past, more than it deserves. So,
yeah. I'm reminded of a quote from Warren Buffett. In the short term, markets are a voting machine. In the long term, markets are a weighing machine. And in the long term, the dollar weighs nothing. So you're going to need an awful lot of them in order to buy anything of substance. So that's what we're seeing here.
Yeah.
Yes.
Okay.
One other bit of news here. India unleashes silver as banking collateral with a 10-to-1 gold-silver ratio, declaring silver global monetary metal. And I've heard a lot of people comment that this implies that the gold-silver ratio should be 10-to-1. And I think this is a huge misinterpretation about what's actually going on in India. So I actually just wanted to clarify that for our viewers. What's going on is that India is setting silver as collateral for bank loans. They're capping the amount of gold that you can pledge as collateral at 1 kilogram and the amount of silver that you could pledge as collateral at 10 kilograms. So that doesn't imply that the value between the two metals is 10-to-1 or that the price should be 10-to-1, nothing like that. It's like if they said you could pledge your house as collateral or up to 3 cars as collateral. That doesn't imply that the exchange rate between houses and cars should be 3 to 1. Not at all. So it's just interesting
Right.
that the bank is allowing gold and silver to be collateral in the first place. I wouldn't get too hung up on the ratio of 10 to 1.
Yeah, except I do think that that's probably the area that it's destined for, simply because of the shortage of silver as compared to gold. And we haven't gone into a global recession yet. And when we do, 60% of the 2/3 of the silver supply is a byproduct of mining metals that are very sensitive to recession risks. And so, just when people start rushing toward gold and silver as a monetary metal to protect their wealth, that's when the supply dries up. At the same time that demand increases, supply goes away. So that's, yeah. Okay.
Exactly. Well, we do have a
Yeah.
chart of the gold silver ratio in just a minute. But first, a couple quick announcements. I want to remind everyone and thank everyone for watching my new series, Hidden Secrets of Value. The first 2 episodes are already out, so that's very exciting. We've had tens of thousands of people watch it.
I want to congratulate you, Alan. It is a great series, and it's taken a long time to get here, and now it's finally out. This is awesome.
Yes. Well, thank you so much, Mike. Of course, it's an homage to your series, Hidden Secrets of Money. It'll never be that big, but that's okay. I really appreciate it. And thank you for inspiring me and so many others. So thank you.
Yeah, well, you and I are both going to be at the New Orleans Investment Conference. So people didn't know this until now, but Alan is going to be there as well. So, come on down to the New Orleans Investment Conference and meet us. But look at the caliber of keynotes that they've had in the past: Margaret Thatcher, Steve Forbes, Milton Friedman, Gerald Ford, Norman Schwarzkopf, Ayn Rand, Alan Greenspan. This is an amazing list, and it shows you what a preeminent investment conference that this is. This is like the top of everything out there. So anyway, come and meet us. November 2nd through 5th, I believe, are the dates.
Yep. November 2nd through 5th. So get your
Yeah.
tickets now, and we'll see you there.
Yeah.
Awesome.
Okay.
So, Mike, you asked me to include the inflation calculator.
Hi, it's Mike here. Just a quick message. I wanted to welcome the huge number of new visitors to our videos, but point out that less than 15% of our viewers have subscribed to this channel and hit the notification bell. We're heading into some turbulent times, so if you don't want to miss any updates, make sure you enable notifications. And thank you as always for clicking the thumbs up button. One more thing. At GoldSilver.com, we've been providing top-notch educational content for over 20 years. If you'd like to help us continue this mission, we'd be honored to be your precious metals dealer. And now, back to the video. Yeah.
Awesome.
Okay.
So, Mike, you asked me to include the inflation calculator from the BLS because we were talking about silver and its all-time high of 52.50 back in 1980. And it has the same buying power today, according to the government CPI, of about $218. And of course, we're still not there yet. So we're well below the inflation adjusted high. And this just shows us how much more time there likely is in the bull market before we get to those previous highs.
Yeah. Silver is still a bargain, and we're going to show that with the gold-silver ratio. But I also asked you to do the inverse of this to give people an idea of where silver is compared to its previous high in 1980. So let's there we go. So
Exactly.
it's at $12 and is that 61 cents or 80?
61 cents.
Yeah. Okay.
Yeah.
Yeah.
So
So
still a long way
it's
to go. Still
a
another
long way to go.
Still
Right.
another four-bagger relative to the dollar, and that's just based on the CPI. Of course, it's probably a lot more than
Yeah.
that to account for real inflation.
Yeah,
So,
you've put together a spreadsheet and a calculator that sort of splits the difference between the original CPI and the new CPI And the truth really does seem to lie somewhere in between. But what was the inflation? I can't remember what the inflation adjusted price was compared to the original, the Shadow Stats CPI. Wasn't it
I
close to
think
$1,000 an ounce?
it might have been 1,999, like basically
Wow.
2,000.
Yeah.
If I remember
2000.
correctly, I'd have to check the
Right.
spreadsheet, but yeah.
Which seems insane, but everybody has to remember these are just this is the way the government used to measure inflation. Those are government numbers that we're using.
Yeah,
So yeah.
exactly. So let's take
Okay.
a look at the gold silver ratio. And what I did here, so the gold line is the normal gold silver ratio that everyone's used to. The
Uh-huh.
silver line is basically the price of, instead of 1 ounce of silver, I did 100 ounces of silver. That way we get whole numbers on our scale instead of, 0.05, 0.06, something like that. They're actually whole
Yeah.
numbers. So you can see the symmetry here and, the wealth cycle that you've identified, Mike. And it looks like it's going to close at some point. We don't know what day, obviously, but it looks like it's going to invert at some point, and that implies that silver will outperform gold by quite a bit when this reverts.
Yeah, like I said, it takes monetary demand, and we've seen the beginnings of that. But what's interesting is we've seen it pretty much all overseas. The what we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States, but in Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London uh, can't continue overwhelming the physical market.
Exactly. Exactly. I have the same chart here presented logarithmically. I don't know if there's anything you want to comment on here, Mike. Otherwise, I have another chart to show.
Well, it just shows this wealth cycle more clearly, and the amount of reversion. And currently, we are at Show what's the next chart?
The next chart is the gold silver ratio in gold. It's the same thing we just saw. However, I've also plotted on the right scale the opportunity size in silver to catch up to gold in order to get back to the all time high or the all time low, depending on your perspective. So, the all time high for silver relative to gold was at a gold silver ratio of 14 to 1. And we're
Uh-huh.
up around 80, 85. I made this chart a few days ago. I think the ratio is about 80. And so that implies that silver would have to outperform gold by 5.7 times in order to catch up. So it doesn't give, quote, a date or a number of years, nothing like that. But
Okay.
eventually it would have to outperform by 5.7x to catch up to the previous gold silver ratio.
Yeah, well, while we're making this, we're currently at like 85. So I just did the math again, and I come up with 85 divided by 14 is 6.07 uh, times. So
Mhm.
more than 6 times is the leverage. But like I said at the beginning of the video, it is a wild ride. So if you're going to climb aboard, make sure you strap in.
That's right. Yeah, wear a seatbelt, guys.
Right.
So, yeah, very exciting opportunity for silver. So, yes, a tweet from Luke Groman here. The U.S. federal debt has grown 8.5% compounded since 2008. So, of course, we did just hit 38 trillion in the national debt, and it's compounded 8.5% per year since 2008. And Rick Rule points out, not coincidentally, gold has increased 9% per year, compounded over an even longer time period. So, gold keeping up with the debt.
Yeah, yeah. Well, again, that's was one of the key premises to my first book was gold doing an accounting of the currency supply, the expansion of it, and this is an example of how well it does it, and it's done this over and over again throughout history. So that was just something that when I got into this and made a commitment to it, um, these factors that when I discovered that gold had always done this, and it seemed like it would always do it, that's when I just went. And I used to be, I'd tell people that I was fully diversified, that I own both gold and silver, and really, though, for many, many years, that was my only investment, gold and silver. And everybody thought I was nuts, but it's turned out to be the top performing asset class of this century. So, and I keep on saying there are these rare moments in history where it's not just the safe haven asset, but it's simultaneously the safe haven and the asset that has the single greatest potential gains in purchasing power, the precious metals. So,
Absolutely.
yeah.
And I'm glad you've been saying that, because that's where I got the idea from. that's where I learned how to build my portfolio. So thank you.
Okay.
So this is going back, 25 years or so. And as we look to the future, we got to ask ourselves, do we think the US government is going to be in even more debt? If so, do we think the price of gold will account for it? Because looking at the gold futures market, you can buy gold for delivery 6 years out, okay, June of the year 2031. And the cost
Yeah.
of doing that is just $4,600 per ounce. Likely a
Unbelievable.
steal. Isn't that crazy?
Yeah. It seems like there's a digit missing there.
Yeah,
should,
I
we,
know.
should we move the decimal?
Exactly. Likely a steal.
Right.
So someone down here says, I'll take the double on that. And Brent Johnson reminds us, if this pays off, you will be settled in cash and won't ever get the gold. So he's probably
True.
right.
Yes,
Yeah.
he is absolutely right. Yeah, the one thing that commodities exchanges are really good at doing is changing the rules. They
Yeah.
make the rules, enforce the rules, and change the rules at their whim. So
We're going to have to do a video about that.
yeah.
Okay, well, I want to end here with our meme of the day, which isn't so much a meme as something that actually happened. JP Morgan's Jamie Dimon says gold could hit $10,000. When the world's top banker starts sounding like a gold bug, the reset has begun.
Yeah, and I do believe that. So this is. I do believe that is what's going on right now. That is the reason for gold becoming 1/5 of global monetary reserves. That is the reason for all the trends that we've just seen in this video. And this monetary reset, it's there are things that happen very slowly at first, and then all of a sudden. This is a Hemingway quote, I believe.
Yeah.
Right. And how do you go bankrupt? Well, very slowly at first, and then all at once.
2 ways: gradually, then suddenly.
There you go. Right, gradually, then suddenly, and that is you don't want to get caught up in this monetary reset and be trying to buy insurance against it at the very end. Once your house is on fire, you don't apply. Make your insurance application then. You make it long before. And it just does seem like this is something that is happening. And it's another one of the premises of in my first book. And it's all playing out. It's taken a little bit longer than I thought it would, but it's all happening. It's all true. So
Yep.
I want to thank you. This was a great video. Thanks for putting this together.
Yes. Thank you, Mike. And thank you, everyone, for watching.